Good morning and welcome to the market forecast. Fellow futures traders, Forex traders, friends and family. It is Thursday, January the 14th. I'm John Hoagland. As always, thanks for trusting me with your time. As usual, we're going to be looking at these markets in context through the lens of risk management, and some of these markets breaking some technical structures and some longer time frame inflection levels this morning as we speak. It promises to be an interesting and potentially profitable trading day with some pretty decent opportunities. This morning at 7:30, the jobless claims numbers came out, and not all that great. Just kind of looking here, the initial jobless claims were looking for a 795 thousand initial jobless claims to come in. It came out pretty much a lot worse, 160,000 more than expected at 965,000. The continuing jobless claims was looking to come out about 5,061,000. It came out considerably worse than that, 5,271,000. So some bad news as far as jobs are concerned in the short time frame. This is a weekly number that does come out. Import exports, however, did come out a little bit better than expected. We're still waiting for the 9:30 number, the nat gas number, and we do have four talking Feds today, including Chairman Powell, he's due to speak at 11:30 a.m. Central Time. So keep your ears and eyes open in that regard. As far as other news is concerned, I'm sure we are all aware that the president has been impeached for a second time. There will be no Senate trial before the Biden inauguration. Biden is set to announce today his details for plans for extra support for the economy through the COVID pandemic, as I'm sure we've all heard. That is coming with a promise of a price of trillions of dollars. Crude prices were consolidating last night, waiting for the OPEC's monthly report that was due out at 6:20 a.m. Central this morning. Apparently, traders not necessarily liking it. We've got a little bit of a push to the downside here before the regular trading hour open. It is in rollover. We are still trading the February contract. We're going to look and see what the volume looks like tomorrow morning to see if we should switch tomorrow or Monday. Make sure you stay tuned in that regard. The VIX is up a little bit this morning, 22.28, nothing tremendous. Dollar index also up, holding above that 90 mark at 90.50 last I checked. I want to say thanks to all of you who joined me for the group coaching yesterday. I really enjoy those, and hopefully everybody that comes finds them useful. We do that every Wednesday. I'll start putting the link in to sign up on Monday, so you can be ready for any questions that you want to bring. Today's a big day here at Top Step. At 3 o'clock today, you are going to be welcomed to a live Q&A with Michael Patak, the founder and CVO of Top Step. It's going to be on YouTube. I'm sure you've gotten the emails. If you have questions on how to get in, contact support. But it should be a really good and informative event with our good friend Michael. As far as everything else, make sure you like, share, comment, questions. Feedback is always welcome. I always do enjoy a good heckling. And make sure you subscribe to our YouTube channel. You get notifications for when we do go live for forecasts, recaps, and especially for the Q&A with Michael Patak today. I want to say good morning to Phil K. It was a great conversation. Looking forward to figuring out who you are on this picture behind me here. It's going to be an interesting opportunity for us to have a little chat about life on the trading floor. Man, was it something. All right. Pretty sure that's about it. Always want to say good morning to everybody. Charles March, first one in the room, you win the prize. Danielle, guten Tag, MSS Capital, Vladislav Tehran, good to see you. Cesar, Murph, another great day, traders. Enjoy it and trade well, absolutely. D. McGregor, good to see you, Mr. McGregor. Main point, big ideas. Good morning, Taurus Trader. Yes, 8 a.m. Central Time. I'm glad you're here. Excellent. And Thanks for the questions and for joining us last night or yesterday afternoon, I should say, for the group coaching. Felix Escobar, the infamous, good to see you. Murph, hard to remember everything, yes. Mike Magallanes saying that the chef is here. Danny Ireland, Taurus Trader, Josiah, good morning. Jobless claims stimulus sentiment appears to be strong with the Biden administration, and we're apparently going to be finding out about that today at some point. Bill Phillips, Esteban, good to see you. James, good morning. Main point, big ideas. I have a few questions. First, can I rewatch the group coaching? Can you set economic events the way it was in your old system? Not quite sure about step 2. Main point, big ideas. I'll see if I can find your email, and we can discuss having the ability to watch the group coaching yesterday. Good morning, Richie. Good morning, Jose. JD, the dancing bear in the room. Always good to know that my friend JD is with us. Angelina, Tim G, Will, good to see you. Taurus Trader, excellent. Good day, good day, and good takeaway. Excellent. Glad to hear it. Andre, Vlad, Vastwes, and Patrick Barnard, good morning. Maybe a couple of new names there. Welcome to the Market Forecast. If this is your first trip joining us for the Market Forecast, as always, we're gonna jump into the charts now and see what's going on. I've seen some decent changes here after the jobless claims numbers came out. We're going to take a look right now. Let's take a dive into those charts. Let me get the right things going here, starting with the daily in crude. Here we go. All right, so here we go. All right. We know we're in rollover in crude oil, which tends to make the market a little less directional and a little more range bound. And even though we've seen some decent directions in daytime frame, when it comes down to it, we really haven't moved in 5 days. The OPEC meeting, there's some digestion going on in that. The front month volume was still pretty impressive yesterday. You know, if this is not an error, some pretty decent volume and a pretty good increase in open interest to 5,100 yesterday. But again, that can be somewhat rollover related. So we're still in kind of a 4 to 5 day rangy area here. What are we going to be looking for as far as opportunities are concerned? Well, looking at it this morning relatively early, I was thinking, it looks like we're probably likely to kind of open inside of range below value. We didn't really have any overnight inventory with which to speak of because settlement was 92, 91. We had danced above it. We had danced below it. We had danced above it. Maybe we started to get a little bit short here. And I was really kind of thinking that the focuses of our major players is going to be on the rollover. So I'm going to try and stay patient. I'm pretty sure that we've left the opening range at the low of the session here. And that might be bringing us a pretty decent opportunity to bring price back towards settlement, because I do believe in the short time frame, in short time frame minds, we started to get a little bit ahead of ourselves and a little bit too short to the downside here. So a move back to close the gap seems to be in order. I don't think that we've necessarily closed the gap, but we are dealing with gap rules. If we can't close this gap, then we'll start to look for opportunities to sell strength in this market, to see this market continue to move to the downside. Not really all that fascinated or is this on my radar? Is this one of my favorite markets today? Not really, because of rollover. Rollover tends to make markets a little bit choppy, a little bit more difficult to trade. And I see a couple of you talking about, all this week was pretty choppy, probably talking about rollover and or other markets, because there's so much to digest out there. Between impeachment, stimulus, jobless claims, OPEC, all of this information, Just takes time for the market to kind of digest and find some sort of direction. So, there's still money to be made in choppy markets. It's just it's a more of a reversion trade than a continuation trade. Those of you that like the continuation trades or the breakout trades are probably having a rough week this week. Those of you that are looking for mean reversion trades or reversion trades, or maybe you've done pretty well this week. So think about the market state that your market that you're trading is currently in, and try and put together that strategy that meets that market state. It's so vitally important to try and do that. It starts with just looking at the market in longer time frame, setting up hypotheses, and then being patient and waiting for one of those hypotheses to seem to come true. Speaking of hypotheses, we were looking at this little range area up here in the S&Ps as a potential bull flag. Well, we are potentially breaking out above that bull flag today. We had an additional 30,000 contracts, and that's estimated, of course, in open interest on this move to the upside yesterday. A little bit low volume, but when the market moves to the upside, it doesn't surprise me. The equity markets, particularly the S&Ps, don't necessarily show big volume on up days. It's the down days when the big volume tends to come in. So watching that open interest, I'm thinking we probably piled in some longs up here, and if that open interest continues to increase in the upside move, it's going to make this auction that, this longer time frame auction that is still holding structure from back in, let's call it the beginning of November. It's still holding structure. It's going to, that as long as people still keep coming in to the long side here, that the market is going to continue to move to the upside. There was some evidence of unfinished upside auctions on the profiles, and I'm going to show you on the 30-minute chart where those are. And by unfinished upside auctions, I'm talking about that the market is trying to move higher, but is not finding rejection. It's not finding rejection or excess at the highs, and I'll point those out to you very shortly. That open increase on an up day, on a potential breakout of a bull flag, might be something to just keep your eye on. Here we go to the 30-minute chart. Here's our bull flag here. We really broke out above it yesterday, and we've been kind of holding above settlement. Okay, the market's kind of spending time at higher levels, perhaps accepting those higher levels. The short time frame week highs, okay, so the night before last, we put in a week high here. Some would say it's more of like a double top and might be some sort of resistance in it. At the very least, initially, it was resistance. We did not see any real excess up here. And by excess, I'm talking about excess like this, okay, a nice long wick up there. We got a week high here. We've got a week high here. We got a week high here in yesterday's regular trading hour session. We see a little bit of excess up here, but this unfinished upside auction here might be indicating to us that the market is not that weak. Now we've got other information that says we had a bull flag. We broke out of it yesterday, and we're spending time above that line. We're spending time above settlement. If we can continue to spend time up here and build volume, I don't see any reason why we can't get a true test of weekly kickoff high, which is really up at 38.40, about 30 points away. 30 points, that could be a daytime frame range. So there's that potential. I'm going to be watching our overnight low. Okay, that's kind of a target-rich environment. Our overnight low is pretty close to our point of control here from yesterday. We've got our settlement price right here, which is 38.0375, and we've got our overnight low. So this looks like kind of a target-rich environment. If I get the opportunity, that might be something I will look for as an opportunity to take an execution. By a week high, I mean the market didn't really come up here yesterday and reject quickly. The market was still willing to go ahead and take that second look up there. There's no excess, and by excess I mean when there's excess, price gets up to this level and is rejected pretty quickly. Usually there's going to be kind of a longer shadow or a longer wick at the top, maybe kind of similar to what you're seeing here in the overnight. But the information from the regular trading hour session is information that I trust a little bit more than any information in the overnight. Okay, so that's what I mean by a weak high. You know what? I can probably show you a little better. This is the TS Trader profile. This is yesterday's session. I don't have the overnight sessions on this profile, but what this is saying is this is excess. Price got up here, was viewed as too expensive, found sellers, and was rejected relatively quickly. This is no excess. This is potentially an unfinished upside auction because the price got up there and it got up there again. Now, this is not the weakest of highs, but it is not a very good high. There's a couple of reasons for that. The exactness of this session, of this 30-minute and this 30-minute high, indicates that it was only short time frame traders who were looking to sell this level. Okay, so we look like we are ready to go ahead and retest this unfinished upside auction relatively early in the session today. All right, hopefully that helps, and if you have more questions, you can always join us for the group session on Wednesdays. And of course, you know, we do welcome questions here, but I do want to move on here because I want to make sure everybody is set and ready for the equity open. I do tend to get a little bit talkative here. Sometimes I ramble a little bit. It's a fault of mine, and I'm sorry. The NASDAQ. Okay, another potential breakout of a bull flag. This is weekly kickoff for 2 weeks now. We don't really have any big volume on this, on the move to the upside. We did add 4,500 potential open interest on the up move yesterday, and it doesn't surprise me that we didn't bring in volume because, again, we're still largely range bound. We still have weak excess at the highs, not incomplete auctions at the highs. We have excess at the highs, but I'm not viewing it as very good excess. Take a look at the 30-minute chart. Okay, weak high. Small excess. Where are we now? We have no overnight inventory in the NASDAQ, nothing to work with there. We're right near settlement. We're inside value area. Also, nothing really to work with there. I'm going to try and stay patient in the NASDAQ today. I don't think that we're going to see any particular big opportunities or best trade locations that are going to happen early in the session. And that could be dead wrong. Watch the opening range. If the opening range offers a cheap trade, you might want to think about taking it. But, you know, overnight low, I'm finding interesting. The closer we can get to where we broke out above this kind of what I would kind of look at as a demand area where we got to last night, the better off I think we might be. So try and stay patient. Look for opportunities at our overnight low, perhaps even our overnight high. Gold. Boy, gold has really just been just not really doing all that much. I think there are some, excuse me, I think that there may be some opportunity coming here. I think that we're really just in a need of change here. We had this, kind of looking at this as a bear flag. We've broken out kind of below that bear flag. It's going to be interesting to see if we can hold our overnight high as resistance because it lines up pretty closely with that. Let's see here. We really kind of 4 days in balance. Probably some of the choppiness that some of you are talking about. Volume continues weak at these lower levels. All right, we put in this low here, which was an island low, which should be a really strong low. We had a pretty decent move. We're pulling back. We're still working with this trend line here. No acceptance. Remember, we talked about weak highs and weak lows. Well, on the daily chart, these long shadows that we see at the bottoms of these daily charts are rejection. That's excess. Now, the more often we go and recheck that excess, the less likely it's going to hold. And now we've got a bear flag breakout to the downside. Let's take a look at the 30-minute chart here. All right, so here's our breakout last night from our bear flag. We've got settlement all the way up here, 1854.90. We've got some pretty decent overnight shorts in this market, but this consolidation, largely from 10 o'clock all the way through the open, is just time spent evening out that inventory. So we're going to see how this market looks. If we can't close the gap, that gap, which basically looks at our overnight high, we're going to start looking for opportunities to sell strength in this market. I've been a little bit cautious to be involved, even though the market opened out of balance, because it's already created a degree of balance down here. So I'm going to be patient. I'm going to be looking for trade locations as the day goes on. If we can't close the gap again, the gap rules state, if we can't close that gap relatively early, we look for opportunities to sell in the direction of the gap, which would again have us looking for shorts. Anything is possible. And with the headline risks that are out there now, really just try and keep your eyes on the news and make sure you are using stops. We're going to rip through a couple of currencies here. The euro has been for 3 days trying to test this weekly kickoff low. The more often it visits it, the more often it's going to be likely to break the back of the buyers down here, and we have that potential today. I see one speed bump in this swing low, which is 120.90, that might provide some support, and if this does not hold, I see plenty of space down below for a move back in the opposite direction. How soon is relatively early? That's a great question, David, and it's something that nobody can really tell you one way or another what relatively early means. It's a subjective term. The way that the market looks in gold this morning, relatively early, I would probably say is within the first hour or hour and a half of trade in today's session. If we don't bring that market to close that gap in that first hour to 2 hours, I would think that that's marking acceptance of lower prices, and then I would look for opportunities to sell strength in that market. Doesn't mean that any of this is absolutely true or going to happen. It's always about the probabilities. So, all right, back to the euro. We are seeing a breakout, potential stage 2 breakout. I'm calling it because we have longer time frame move here. We had a short time frame trend line, 1, 2, 3, 4 points of contact that broke last week. Now we're breaking weekly kickoff low. And the more time we spend down here, the more likely we're going to accept those lower prices. Again, this 120.90 level looking like a possible support level. The 30-minute chart here has us really just kind of closing one bar and opening another right here. The opening range is neither the high nor the low in the euro. So we're just kind of spending time down here. I'm not, however, all that pleased with the lack of momentum we are seeing at a level of importance or a level of inflection that I've deemed important. Maybe I was mistaken. Maybe we haven't woken up the traders that are going to be looking at this. And, of course, everybody is going to be looking at the dollar. Now, the dollar was a little bit higher today at 90.50, but nothing tremendous as far as all week. It's really just been kind of dancing around that 90 level. So kind of keeping an eye on that, watching weekly kickoff high or weekly kickoff low, I would say, as a possible resistance level. and an opportunity to limit our risk. We do have a little bit of a gap. And as again, gap rules, we can't close that gap. Here's that term again, relatively early. We look to take trades in the direction of the gap, which again would have us looking lower. All right, the Japanese yen is 5 days of balance. The market has struggled to accept outside of weekly kickoff range. It's pretty centrally located. And as far as the weekly kickoff range is concerned, we're in short time frame control here. We added 1,400 in open interest after testing above the weekly kickoff high yesterday. I would say that if that's the case, then we've probably brought in some sellers. Are we going to get too short? I don't think we're at risk of that here just yet, because again, we are so centrally located inside the range from this week, as well as the weekly kickoff levels. Taking a look at the 30-minute chart, we have settlement up here, 96.33. Put that on your chart. And do we have any shorts here? I mean, we have this one push to the downside off of settlement. We've probably had some plenty of time here to kind of even out that inventory. As we consolidate, we even out inventory. So I think we're ready for our next move. We've got a gap here. I don't think that the opening range is either the high nor the low of the regular trading hour session anymore. So, again, it's gap rules. If we fail to close the gap, then only one of two things can happen. It can continue to range here, or the market can go lower. It's that gap close. If the lack of gap close that creates that resistance. Close the gap, and it's another hypothesis. Okay? All right. So we've got just a couple of minutes here before the regular trading hour equities open. Again, join us. Join Michael Patak for the Q&A session at 3 o'clock today. I'm looking forward to it. Hope everybody has a good trading day. Today is Thursday. We are rounding the far turn. We got one furlong left for the day tomorrow, and then it's the weekend. And we're all looking forward to getting some profits and having a good end of the week. So I think that's it. I don't think there's going to be any recap. The recap is going to be the Q&A with Michael Patak. I'm looking forward to seeing all of you there. Bring your questions. Get out there and profit. I'm going to take my deep breath. Humble, grateful, and creative. Trade well today. We'll see you tomorrow. Take care now.